Hello and welcome to Rajya Sabha Television. You're watching a brand new edition of Policy Watch with me, Frank Pereira. All modern economies have progressed by creating jobs and expanding the middle class, whose consumption then becomes the main growth driver. The middle class in India is currently responsible for the seeming calm in the economy. While industrialists have hesitated to invest in new projects and businesses continue to cut costs, mainly jobs, the middle class Indian continues to spend on clothes, vehicles and durables, keeping the economy ticking. But where does this confidence to spend come from, and can a bullish middle class sustain the India growth story? That's what we're going to discuss in the first segment of Policy Watch today. Joining me on the program are A.K. Bhattacharya, Editorial Director of the Business Standard, and Nitin Desai, former Chief Economic Advisor, Government of India. Thank you to both my guests for joining me on this edition of Policy Watch. Mr. Desai, I'd like to begin with you. Do you believe that the middle class is what's keeping the economy afloat today and they're contributing immensely to the economy?
I would say I'd emphasize the word today, because it is possible that this year, because of the extra money which came in because of the 7th Pay Commission, there may be this burst of spending by middle income households. But a country like India cannot rely simply on middle class spending power for growth. And in fact, if you look at the record, the growth in rural consumption, what really was what drove things like FMCG. If you're looking at FMCG, fast-moving consumer goods, not durables, then basically it's the expansion of them into the rural areas which has driven growth in those segments. And that happened when rural incomes were increasing because of Narega, high MSP, etc. So I'd say that what you're seeing today is probably maybe that is because of the Pay Commission awards. But the reality is Indian middle class is not all that large. You know, remember this. I mean, 75% of the households in India have no ownership of any transport mean except perhaps a bicycle. 2/3 of them still use, well, in 2000, according to 2011 census, 2/3 were using firewood for cooking. 2/3 did not have latrines in their house. Now, those people are not middle class. They are not in the market for fancy clothes or durables or any such thing. So you cannot run an economy which is catering only to 1/3 of the population or 1/4 of the population. You may get something out of it, but that's not the long-term trend, because there will be a saturation beyond which you'll have to start looking at other avenues of growth.
Sure. Mr. Bhattacharya, where is this confidence really coming from as far as, the spending power of the middle class or the lower middle class is concerned?
Well, I think you first need to define what is an India story. And as Dr. Desai rightly pointed out, that what is the size of this India's fabled middle class. If you look at the 2015 data compiled by Credit Suisse, India has a middle class population of just 24 million people. Now, they actually constitute a large chunk of the wealth in this country. So, if you take the middle class and the upper middle class, the rich, they acquired the chunk of around 94% of the wealth in this country. Now, it is a highly inequitable way the wealth has been distributed in this country. So, therefore, yes, you will get more mobile phones will be sold, more fridges will be sold, but the growth, to my mind, on such a narrow base will be limited and for a short time. So, therefore, if you really want the middle class to be an active agent in realizing the India story, in my view, you have to first widen the canvas of that middle class. And for that, you not just need just a narrow base of consumption-led growth. You need a growth story which is fueled by investment, which is fueled by more employment. So therefore, to see green shoots of boom or growth in that narrow base, to me would be a very short-sighted way of looking at growth and development potential of this economy. On the contrary, you have to go to the larger the base, the population base of this country, which is probably waiting to realize its potential, and you need to invest a lot in education to create the capacity for them to get jobs, and you need to make sure that with the help of that creation of the capacity, you need to make sure that there's enough poverty elimination is taking place. This country still has a poverty level of around 23%, you go by any definition. Now with that kind of unequal system, in my view, you cannot just expect a middle class as narrow as 24 million to revive and keep the India story alive. On the contrary, my fear is that to expect this small base to keep the India story alive is actually socially very explosive, and it can have very serious socio-economic consequences.
Sure. I think both the speakers have very, categorically stated that this is not really the way to go forward, and the middle class really can't drive the economy in the long run. It might be helping in, the short term at the moment, but it's not at all a long-term solution as such. What needs to be done, Mr. Desai, immediately so as to give the economy a boost? The government has stated very clearly that the NPA problem needs to be dealt with. Is that the source of the problem as far as the economy is concerned?
I would say that's an important part of the reason for the stagnation in investment. After all, if a large chunk of the corporate sector is stuck with loans they cannot service, you cannot expect them to invest. At the same time, the banks stuck with the NPAs don't want to lend. So you have a double balance sheet problem, which is certainly holding back things. But the core of the problem, as I see it, is people don't see demand growth. I mean, I know the numbers are there in the GDP, but I can tell you, you talk to anybody who's in this business, and whether it is cement, whether it is steel, they do not see demand growth. Therefore, they are not investing. In fact, companies are sitting on cash. And it's a lot of that cash is incidentally finding its way into the stock market, the surplus cash which is there with companies. So the answer is demand growth. And demand growth will have to start at the investment end. It is always, we've known from the time of Keynes, that this is the factor which drives, through the multiplier, it drives growth. And it's in, how do I do an investment boom? I cannot turn to the private sector and ask them to do the social service. It has to start with something effective at the public investment end. And I think the government is trying to do a few things, but it must be more broad-based. They're doing it in highways. They're probably trying to do it in railways, but I'm not sure if they've been very successful in boosting investment there. They'll probably do something more on the urban development side, but they need to really jack up their spending, or investment spending, can just kickstart the economy in some way. Exports. This is the other thing which can drive. And there are some slight signs of an improvement. But then what are we doing with our exchange rate? We're allowing the exchange rate to appreciate, what is it, about 5% or so?
It's 6% increase in the last 6 months.
Yes. Now, that's not a sensible way.
Yeah,
and basically, the only thing that can actually start the thing now, I see, is if they can do something more sensible on the exchange rate to give export growth some greater scope. There are some signs of export growth over the past year. So I would actually push that. And then public investment plus a sensible exchange rate policy to push export growth would probably be my advice to the government on how to kickstart.
Sure. Mr. Bhattacharya, is there a long-term plan so as to deal with the economic problem? I wouldn't call it a crisis as of now.
Yeah, sure.
We still have a robust growth rate at the moment. But what needs to be done? Do we have a long-term plan as such? And what are the sectors that we need to concentrate now immediately? I think
Dr. Desai talked about NPA resolution. I think this is work in progress and it is moving apace. So therefore, that's one long-term, definitely action plan. In my view, the exchange rate policy is also a long-rate plan, because it's not just for exports. Remember, this is also has hobbled our domestic manufacturing.
Yes.
Because if your domestic manufacturing and especially the importable manufacturing sector will actually is being badly hit, because imports are getting cheaper at a time when your rupee is already overvalued by 30% by the RER. Now, the third element I would see, you must tackle the monetary policy issue, which is that if the inflation rate has stayed so low, well below the 2 to 4% range, 2 to 6% range of the RBI mandated inflation targeting, then I would imagine that the RBI must be engaged, and if it can help in making sure that interest rates are brought down so that there is some revival of some animal spirits.
In the present scenario, does the RBI have elbow room to reduce the interest rates further?
I think it is behind the curve, and RBI can easily go 25 basis points or another 50 basis points. But the fact is, in the last monetary policy statement, RBI has not even changed its monetary policy stance. It still remains neutral. And the final point I would make is the government must stay on the course of fiscal consolidation, because the states are doing all kinds of things. They are doing loan waivers, for whatever reasons they are doing. And if you take the state deficit and the central deficit, even though the center may stay on course, if it is the total deficit, if it is more than 7% of GDP, then to my mind, that will be a worry point once again, because after all, government borrowing will crowd out money in the system. So therefore, these are all a few of the steps that the government could actually consider.
Quick closing comments from both my guests to close the segment, starting with you, Mr. Desai.
Well, on the final point, the government is focusing increasingly on populist measures like loan waivers rather than long-term growth-boosting measures. And I think they have to shift their focus to growth-boosting measures. The exchange rate is particularly important right now because it's really, we've appreciated vis-a-vis the yuan.
Right.
And Chinese imports have become cheaper. Our deficit, trade deficit with China has shot up to a huge number. It's a very large chunk of our total trade deficit.
Almost 50 billion. Huh? 50
billion is that trade deficit with China. Our exports to China have not gone up. Our imports from China, I have no problem with getting it from. I have no problems with China. But it's just a simple measure that we have allowed our exchange rate to appreciate vis-a-vis a country which is probably would be our main competitor when we try export growth.
Right.
It can't work. They have to address the exchange rate problem immediately.
Mr. Bhattacharya, your concluding remark on the segment.
I would say that government must not, as the Finance Minister, Mr. Arun Jaitley, said some time back, that there are no finishing lines for reforms. I would say the government must really walk the talk by taking the reforms agenda forward and probably finish some of the privatization proposals that it has taken up, including Air India, and release them from the system and actually go the next stage, take the next step with oil price reforms, wherein the government no longer has a kind of a big brother approach to the oil companies and interfering in the way they fix their prices. So let a marketplace mechanism be there, and if the poorer section of the people, if they feel affected, they are affected by it, the government can step in and do a targeted subsidy scheme, but not give a free for all and freebies for the people who can pay for their fuel.
Sure. All right. On that note, then we'll have to call it a wrap on this segment of Policy Watch. Thank you to A.K. Bhattacharya and Nitin Desai for joining me on the program and putting things into perspective for us. It's time for a short break now. Still to come. SEBI cracks the whip on 331 suspected shell companies. What impact will it have? That's what we will analyze on the other side. Stay tuned. We'll be right back.
Once a private game reserve of the Royal House of Jaipur, Ranthambore. This national park and tiger reserve is one of the world's best-known wilderness areas. Located 14 kilometers from Savai Madhopur, Ranthambore offers some of the finest opportunities for sighting the magnificent tiger in the wild. Comprising 1,334 square kilometers of wild jungle scrub, hemmed in by rocky ridges, and at its center is the 10th century Ranthambore fort. The dainty cheetal, sambar deer, the blue bull antelope or nilgai, rhesus macaque, langur, and an incredible variety of birds amidst a setting of dhok, fig and banyan trees, makes a visit to this park a delight.
Welcome back. You're watching Policy Watch with me, Frank Pereira. The Securities and Exchange Board of India on Monday directed stock exchanges to initiate action against 331 listed entities suspected of being shell companies. Of them, 162 were actively traded. 169 had already been suspended. Some of these companies immediately protested against the regulator's move, pointing to their operating and dividend-paying track record, and said they would seek a legal opinion. According to a SEBI notification, the shares of these companies will be traded only once a month until stock exchanges ascertain whether these are genuine companies or structures meant for fund diversion and tax evasion. The exchanges have been asked to independently audit these firms and, if necessary, appoint a forensic auditor. In our next segment, we will analyze how transparent is India's stock market. Joining me on the program right now are K.A. Badarinath, Editor, Policy Financial Chronicle, and Dhirendra Kumar, Head, Value Research. Thank you to both my guests for joining me on Policy Watch. K.A. Badarinath, what do you think of SEBI's move to go ahead and ensure that, you know, the 331
Yes.
companies of the stock exchange?
No, well, I think this is for the first time that such an action has been taken in such a large number of cases. And normally, by definition, the company's law doesn't say what is a shell company. But then mostly these shell companies are used by several of the market players to launder funds and also manipulate stocks of not only their group companies but also other companies. So the issue here is that if you recall the speech of the Prime Minister some time back, about 160,000 companies have been wound up. They are on the rolls of the Companies Law Board,
Yes.
or the Company Act, but they have no operations whatsoever. And so the issue here is that many of the people, stock shareholders like you and me, retail shareholders, they do not know what are all these companies about.
Right.
And today, I guess there are reports. Our friend Dhirendra will help us out with the statistics. About 36 lakh investors are stuck in these companies. They have made their hard-earned money into these companies, and many of them are stuck because about 50 to 60 companies have been reporting losses for last 4 years.
Right.
And some of the companies don't have any operations. Many of the directors we don't even know. And mostly when the SEBI takes such a decision, it's normally based if there is too much of a volatility in the stock price
Right.
of a particular company. And also it is not in sync with the performance of the company, the valuation of the company, the books, the price earning ratios are not right, or
Right.
it's not in sync with the value that is being there. Especially during the demonetization also, you have seen several companies where there was a lot of volatility in the stock. So that means there is some manipulation somewhere going on. And
There's something fishy, basically.
basically. And some speculators would also use these companies to manipulate the market.
Sure, sure. Dhirendra Kumar, was the action then of SEBI called for as far as these shell companies are concerned?
No, there are, problems at different levels. One is that, any regulatory action should be backed by, or, should be defendable by the regulator, and it should be based on natural justice. And, the normal course of justice should be that, no innocent should ever be penalized. And I think, there is some misalignment on this count. This looks like a mistake because the course has not been correct. There are few genuine companies which seems to have found a place in this list, and that hurts. That apart, I think, this is an activity which should be done on a much larger scale. There are different reasons why many companies are listed which has no business to be listed in the first place. It actually puts great responsibility on the stock exchanges, which are quasi-regulator, because stock exchanges are the first level of regulator for these companies, because the companies have to abide by the listing agreement. So historically, if you look at the number of companies which are listed in India, they can't be, effectively monitored and reviewed, and so investors, there are always some kind of scam which is brewing, simply because the breadth of the Indian market, based on the number of companies which are listed here, are just too many. So that is something which needs a fix, but that needs a fix in a very permanent and a methodical manner. It can't be done on one fine day that these companies, based on somebody's recommendation, without a conclusive evidence of what, without defining what the problem is, they are banned from listing, because this ruling effectively penalizes investors, not managements. That is grossly unfair. In fact, if there is absolutely, there is a reason that SEBI should take action. They should actually hold these managements. They should call them up, and they should actually put penalty on the management, or whosoever they can hold accountable. Put fines, do anything. But this is something which is penalizing the investor in the first place. In fact, this ruling itself, one is illiquidity. The other is this action itself actually reduces the shareholders' value.
Sure. That's a very valid point that he is making. What happens to genuine companies, and also what happens to the investor?
So, how many are the genuine companies? 4 or 5 of them, even Dhirendra knows that 4 or 5 of them have actually contested the decision of the SEBI. SEBI does not wake up on one fine morning to, stop the trading on these stocks. And the grade 6 of the measures that they have taken, that means your stock trading stops today, and only one day in a month you can do the stock trading on these particular shares. But it's that there is a complete basis for what the SEBI seems to have taken. My suspicion is that based on the Corporate Affairs Ministry's list, and in discussion with the Income Tax Department, which has got a lot of data after the campaign on black money, then they did a campaign on how Operation Clean Money and all that. In that, they have got a mine of data. Based on that, perhaps this list has been recommended to the SEBI, and SEBI must have taken a call. But even today, if we recall, there are about 36 lakh investors who have put in their money, hard-earned money. If no action is taken today, somewhere the action has to start. And I think SEBI is in the right way done it. Of course, if there are certain companies which are actually good in business, they have done rightly, and they have done all the disclosures before the statutory bodies, and also they have done their financials right, they are in the business and not being used for laundering money, obviously they will be taken off the list. And today, the independent audit on these companies is a prerequisite under the graded measures that were notified in March this year.
Okay. Dhirendra Kumar has got a counter to what you're saying. Let's listen to what he has to say. Yeah.
No, it's not a counter. I broadly agree with Badarinath, but the point is that, investors are innocent here, and they will be suffering. And these steps are to be taken in a calibrated manner. And SEBI should actually make it very clear that these are the facts, and based on these facts, these companies are getting banned or restricted trading, and over a period of time, these companies have to get themselves delisted. And hold somebody accountable, get the promoters to buy it back, rescue the investors. Because I really don't understand that, one fine day I've been holding the stock of a company, and one fine day I come to know that these stocks will not be traded, or they will be traded just on a day, and the fact that this diktat has come, as a result of which there will be absolute devastation, the devaluation of the worth of that company for the shareholders. That's one. The other is that we have so many other companies And these should, any such action should be backed by factual information, so that we as
Right.
shareholders are able to take an informed decision.
Sure.
In fact, there is great transparency in all the things that is being done. The regulators definitely make it very transparent. Companies are supposed to report each and every action with the stock exchanges and gets into the public domain without any delay. But the regulatory actions, we are unable to find the basis, and in a reasonably elaborate way, because that is one thing which will actually act as a counter to the impression that we are getting, that it is arbitrary, baseless, or may be misplaced.
Sure. We are out of time on the program
And
now,
it
so
hurts
quick
the
closing
management,
comments
it
from
hurts the
both my
investors,
guests.
not the management.
Okay.
That I think is the real problem.
Okay, fair enough. Badarinath, closing comment from you.
See, the issue here is, yes, I agree completely with Dhirendra that, the retail investors like you and me who have put in money have been, caught unaware. But it's a fact that somewhere the cleanup act has to begin, and it has begun. And secondly, now the regulator has to take a call as to how do we deal with the interest of the small investors.
Sure.
This is where perhaps companies like Value Research should come and advise the regulators as to how this interest of the small investors will be protected.
Dhirendra Kumar, close the show for us with your concluding remark.
Yeah, regulator, should give a clearer basis for these delisting. I don't think it could be I think it is unreasonable to actually do this partial delisting of these companies or restricted trading in these companies based on the indication that they are likely to be shell companies. I think we need a clear evidence of that. And I think, the lesson for the investor is that don't get into, of course, any investor who is thoughtful about stock investment should keep away from such companies. And today, based on the information that is available in the public domain about the specific companies, before you invest, I think that it is just reinforcing the basic lesson. Don't get into anything which you don't understand well. Don't speculate. Don't take tips. So those investors, I don't think they have much to worry. Don't invest in stock market without the basic understanding. This is just reinforcing the core thought.
I think that is very good advice, and we hope that investors do take that advice in the future. Unfortunately, that's all the time we have on this edition of Policy Watch. I'd like to thank both my guests, K. Badarinath and Dhirendra Kumar, for joining me on the program and putting things into perspective for us. That's all the time we have today. See you again next time.